Despite an optimistic outlook for gold this year, our next guest recently downgraded his forecast for the yellow metal, calling for prices to end the year around $12.50 an ounce from the originally forecasted $14.00. Joining me now on the line is Julian Jessop. He's a commodity economist for the UK-based research firm Capital Economics. Julian, good to have you on the line with us.
Thank you. You're welcome.
Well, let's talk about the downgrade you released earlier this month. Gold has had quite a good run so far this year, back above the $1,100 an ounce level, as investors seem to be flocking back to the metal here. What do you see driving prices to close off the year at $12.50 an ounce?
Well, first of all, our forecast revision downwards is based on an assessment of how gold traded in 2015. The key driver of the gold price lower through last year was, of course, the strength of the US dollar and the anticipation of Fed tightening. And we think those will remain major headwinds for the precious metal throughout the course of this year. So despite the recent turmoil in global markets, we still expect the US Fed to raise interest rates by more than the markets anticipate this year, and for the dollar to strengthen further against other major currencies. If that were the only driver of the gold price, then I think we might expect significant and renewed declines from here. However, we think that's going to be offset by three key positives. One is a revival of safe haven demand, and that, of course, has been a key factor lifting the gold price in recent weeks. The second factor is a pickup in inflation in the world's advanced economies, so that should revive demand for inflation hedges. And then the third factor is underlying strong demand from emerging economies, both in terms of households in those economies, but also central banks. And I think demand from those economies will remain strong, regardless of exactly what happens to US interest rates.
So, Julian,
they'll be driven more by things like rising incomes and reserve diversification.
Let me ask you, despite the uptick we've seen in gold, is it still hard to be entirely optimistic, the metal? What do you think would need to happen for this bearish sentiment to shift to positive?
Well, I think it needs to be clear, first of all, that any increases in US interest rates will be driven by a pickup in inflation. So the two things should offset each other, interest rates rising but inflation higher, meaning that real interest rates, that is adjusting for higher inflation, won't actually be increasing that much. I think the second thing to happen is probably firmer evidence of a recovery in emerging economies, so that will reassure people that incomes in these economies are going to continue to rise rapidly, and therefore that households will be able to spend more on high-status goods, including, of course, gold. What's more, if central banks in the emerging economies start to add to their reserves rather than run them down because they've been defending currencies, then a significant proportion of that increase in reserves is going to find its way into gold because of the desire to diversify away from the dollar. So I think it's a combination of things that will really drive gold higher. One is a pickup in inflation in the West, and the other is a revival in the economies of key emerging markets.
Julian, just to wrap, so we know you see gold at $12.50, but what trading range are you expecting the metal to stay in? And also, what trading range are you expecting for silver?
Well, I see pretty decent support for gold around the $1,000 per ounce level. After all, there was fears that the first rate hike would trigger a collapse in the gold price and a move significantly lower than that. That hasn't happened, and I find that quite encouraging. So I would see a floor for gold around about the 1,000 level. On the upside, well, it's always hard to say, of course, because gold is so hard to value objectively. But previously we have been talking about gold potentially going as high as 1,400 if there were some major shock to hit the global economy, then safe haven demand could take it back to those sorts of levels. But our end-year forecast of 12.50 sort of straddles the middle there. As far as silver is concerned, if we're right about gold going higher, then silver should outperform. As you know, it tends to be a high beta version of gold itself. But also, if we're right about industrial metals recovering on the back of stronger demand from China, then silver should benefit from that as well. So I think it's quite reasonable to talk about silver recovering to somewhere between $16 to $18 an ounce over the next year or so.
Julian, thanks so much for your thoughts today, and thank you for watching this edition of Kitco's Gold Report. We'll see you tomorrow.